Hey, what's up, guys? Raybar here, checking in with another update for Monday. Today, I'm going to go into two monthly dividend-paying stocks that I am buying, and I think that you guys should research and look into for yourself. But before I do that, I'm going to jump into some quick market updates, some kind of things to look out for this week, as well as kind of go over some of my options plays. If you guys don't want to hear any of the market commentary, go ahead and maybe jump through to maybe, I'm going to guess, around the 3 or 4 minute mark, and I'll jump into the stocks. And if you haven't already, smash that like button, subscribe if you haven't already, and let's get into it. So this week, we have two large, indicators coming due. We have CPI on the 12th and PPI on the 13th. So CPI is expected to come down slightly. And again, we've talked about this in length in other videos. That is going to be headline inflation, not necessarily actual inflation that the Fed is trying to target back down to 2%. PPI is the producer price index that basically kind of will state what producers cost to make the materials of that that the consumers will be buying. So I think those are two big things to be on the lookout for. You're going to have a little bit of volatility. If you notice, last week we were down slightly. Today it's barely up. I think a lot of investors are kind of waiting for all this news to kind of come through. I sold a ton more options, taking advantage of the volatility, specifically with some spreads. I will make a tutorial on spreads, likely on maybe Friday when I close out some of the positions, or maybe next Monday. Excuse me. So the first stock that I am going to go into is going to be Realty Income. So Realty Income, ticker symbol O, is a real estate investment trust, or a REIT. It is the fourth largest REIT in the world, has about 1,240 clients spread across 84 different industries. Realty Income has about 12,200 net lease properties in all 50 states, Puerto Rico, the United Kingdom, Spain, and Italy. So if you don't know what a net lease is, they have three different kinds. You can look more into it on Investopedia or just Google. But basically what that means is the tenant will pay most of the operating cost of the properties, as well as taxes and kind of any other things that the building or the property needs. And basically Realty Income just owns the property and sits back and collects those sweet rent checks. About 76% of the business that Realty Income owns is in the retail space through grocery stores, convenience stores, and dollar stores. A couple of their tenants would be Dollar General, Walgreens, Walmart, and Home Depot. So obviously, you've heard a couple of issues with Walgreens recently as they're kind of closing stores and cutting back. But I think the Walmart and Dollar General businesses are booming as usual, especially kind of in this high inflationary environment. A lot of people are going back to kind of the value retailers and discount retailers. And so I think that those will easily be able to pay rent well into the future. Home Depot is a little bit of a case. I think a lot of the DIY projects are kind of done with people cutting back on cost. But people are staying in their homes longer, so there could be more potential room for the Home Depot to continue booming. Anyways, even though 76% of their business is in the retail space, they are diversifying. They're getting into vertical farming. They're buying a couple of healthcare properties, and recently they got into a casino. A lot of you guys know about the casinos with Vici, but that will be in a later video. Some of the stats about Realty Income here is, their compound annual return of basically 14.6% with an average dividend increase about 4.4%. And that's stats since 1994. So almost about 30 years of history. 15% is pretty good in terms of overall returns. They've paid 634 straight months of dividend increases, or dividend payments, raising that dividend about 120 times in that time frame. Currently, they're yielding about 5%, which is awesome, honestly. And then, analysts have a price target of around $70. If you see here, the price is $59.44, kind of sitting at almost close to the 52-week low. There's still some room to run up from capital appreciation standpoint. We got about 50-50 between a buy and a hold on this company. I'm definitely adding to this. It's one of my largest holdings in my mainstay portfolio. And I think that, they are poised to do well into the future. One of the things I really liked about them is they did divest some of their commercial real estate space back in Orion Realty. I think it was about maybe 1 or 2 years ago. So I think that's good as you kind of see the looming, banking crisis and all these other things. I think Realty Income is a great stock to own. It is a monthly dividend payer. One of the things that you have to think about when you're buying these monthly dividend stocks is that they're typically going to be taxed differently than your regular stocks like a Microsoft or an Apple, because these monthly dividends are typically going to be ordinary dividends, which will be taxed at your effective income rate versus qualifying dividends that are taxed at, capital gains at 15%. All right. So the next stock I'm going to go into, which I've mentioned previously in a couple of my videos, is Main Street Capital. So Main Street Capital, ticker symbol MAIN, is a BDC, otherwise known as a business development company. This stock right here specializes in equity capital to lower middle markets. They do recapitalization, market buyouts, financing, industrial consolidation, and later stage emerging growth, right? So they work in about 26 different areas, and I'll give you a couple examples. Logistics, IT services, telecommunications, and those are just a few. Like I said, I highly advise that you research more into Main Street Capital and look at what all different industries they're in, as well as the companies they're in. Typically, the companies that they are going to be working with, like I said, are the middle market. So they're going to have revenues of about $10 to $150 million. You're seeing here that, Main Street Capital is yielding about 6.6%, which is amazing. It's a great way to boost kind of your current yield. Again, here with the analysts, you have about 50-50 on the buy to hold ratio. We're sitting kind of closer to the 52-week high. So, I've been dollar cost averaging into this company for a while now. Here they are just kind of steadily beating earnings. And I think you're seeing that with the kind of current market conditions we're in as the banks kind of tighten up their lending, as well as, kind of Main Street Capital, benefiting from the increased rates that they're able to charge kind of these clients that they're coming in and doing several of their kind of specialty services, etc. So right now they're paying about I think they just actually raised it to 23 cents per share on a dividend, which they pay monthly. I recently got, a $9.70, or I'm about to get a $9.73 dividend. Last month, I got about almost $20, but that's because usually on the third month of every quarter, so that's like the March and the June, September and December, they pay a special dividend, sometimes, anywhere from 10 cents all the way up to even the amount that they typically pay. So you're going to get pretty good yield from there. Again, BDCs are a little bit kind of complicated, so do your research before you get into this, but I think this would be a great way to boost your current yield, kind of tap a new style of stock that maybe you're not looking into. But just as I mentioned earlier, like Realty Income, these dividends are going to be ordinary, so they will be taxed a little bit higher than usual. So, one of the things that I like to do is I do own both Realty Income and Main Street Capital in my taxable accounts, obviously. But one of the things that you should look into is opening up a Roth IRA, which is a tax-advantaged account. And then this will be a great way to get those monthly dividends and basically not have to pay taxes on them when you can withdraw them at 59 and a half years of age. This is the best way to become a tax-free millionaire. I will do a video on the Roth IRA in the near future. Most of you guys probably already know what they are and how they operate, but it's always good to throw some extra content out onto the YouTube platform. Finally, I'm going to go into a couple of the options plays. Like I said, I briefly touched on them earlier, but I'm doing a put credit spread on SPY. I think that inflation is going to come in on the 12th a little bit lower than expected. So I think that we're going to see the S&P 500 kind of run a little bit towards the end of this week and early next week. So I think this will ultimately end up expiring worthless, which I will claim my entire credit on. Airbnb, you've heard nothing but kind of bad things about like the rental markets right now as people are starting to kind of tighten up their spending. So I'm basically doing put credit spread or call credit spreads on these because I don't believe it's going to go any higher. I'm placing it out, pretty decently. It's a little bit volatile, but I just, I don't think that Airbnb is going to go up, especially looking at the Bollinger Band. 137, in my opinion, is a very safe initial strike on your call credit spreads. So I'm going to start doing a ton of call credit spreads on Airbnb because the collateral is pretty minimal and the premiums are pretty good. I'm making about 12 to 15% on my collateral weekly, which is amazing, right? Tesla, has been on the run. Obviously, we went into that in my last video. I'm selling put credit spreads on those because I think that they're going to stay kind of at the range they're at, if not go a little bit higher. They're the leader in the EV space. I think they have a massive moat compared to the other traditional automakers. They have AI, which is like the new buzzword and hot topic. And, you're seeing a lot of, not a lot, but I guess they have the largest charging network in the United States. And, Ford has adopted their charging port, and I think a lot of other autos are going to ultimately end up doing the same because, again, they just have that vast network. This one I'm down. You see, I sold it last week at a $14 credit, and it's currently sitting at $35, but that's just because they've dropped a little bit from the 270s, but I don't think that we're going to reach the 252 by the end of the week, so I'll likely end up expiring worthless. I'll get this $14 credit in full, and I'll call it a day. I did this 3-option strategy, which I'm getting blown up on again, but it only cost me $5 to make about 75 if it pans out. But I need this one back down to around like the mid 2s. I was kind of betting that the airlines have recently been experiencing some issues and that, it would revert back down and I could cash out. But, this might have been a 100% loss, just like my last one I sold in June. Without any risk, you're not going to make a lot of profit. But just remember, guys, rule number 1 is don't lose money. And rule number 2 is do not forget rule number 1. Anyways, guys, I think that this was a great video. Hopefully I shed some light into 2 new stocks to you guys, Realty Income and Main Street Capital. They are pretty big players in the space already, so I'm sure that most of you guys know about it. Hopefully you guys appreciated the video. If you're still here right now, comment passive income, because that's why we're all here, to make some passive income, escape our jobs, and live the life that we want. Appreciate you guys. See you on Friday.